floor is yours. Let's talk about Udemy.
Yes, so I'm Pavel Cherkashin, San Francisco, venture investments. Okay. So do you want me to give like a full presentation, or have you seen information about the company?
All of them have seen the teaser, but we would love if you share the teaser on the screen and go over it, yeah, and make your own judgment about this. The call today is being recorded, and we will make a summary video out of it, and 120 others who were shy to participate today will hear the story as a follow-up.
But this is only for the club members, right?
Only.
Yeah, okay. Because I kindly ask you to keep everything I say within the club. Okay, don't.
Yeah, no social media.
Yes, because a lot of what I'm going to say is outside of the public domain, and I want it to stay this way. You know, our business is all about insights, so it's based on the information which is not available on the market, and this is the beauty of our business, that we can do it, because when these companies become public, you cannot do this anymore. Because there's a full disclosure and everybody is supposed to have the same information access. In our case, if we can, until the company goes public, if we can find some interesting insights, we can play very well on it. So this is exactly what we're doing with Udemy. So do you see the teaser on the screen? Okay, but I'm not gonna give you the presentation. I'll tell you the way I think about this, okay? So that there is this huge and growing online education market, and it's not only driven by the COVID and the fact that people sit at home, mostly driven by the fact that every year there's hundreds of millions of new users coming online from emerging markets, and the first thing all of these people do, they look for a way to make money. So they look for professions in different ways, and they all turn to online education to find the best profession for them. And we're not talking about profession being like a banker or a chef in a restaurant. We're talking about becoming a SMM manager or doing some work online. So these people, we're talking about maybe another billion people coming online in the next couple of years. All these people are users for online education. But at the same time, the system for online education, the current system that we're used to, was built 200 years ago for a completely different purpose. The main intention was to basically build soldiers or workers for the enterprise, so that everybody can do the same work in the same way. But now it's a completely different task. Now we need people who will be creative, who will think for themselves, who will do different stuff. And the online education system is not prepared for that. So if we move like a year ago, there were several large players competing about who's going to be the winner. Coursera was considered the main market player because they had partnerships with large universities. So Coursera is the only way to get a Stanford degree online. And this was great, and they're still a great company. They're going public in February next year. So it's still a great business. Udemy had a competing idea of providing a marketplace so that anybody can come and put your own course and let other people see it and make some money out of it. And then there are Udacity and probably 20 other services similar to that, but that would follow. The two main leaders were Udemy and Coursera. What happened this year was that both of the companies started the year with approximately the same valuation and the same revenue, about $250 million. Coursera will finish this year with 290, maybe $300 million in revenue, while Udemy will finish the year with at least 400 to 50, maybe close to $500 million in revenue. They're growing like crazy. And I'll give you a very simple example of how this happens. So, and this is what I've seen in the real results. So imagine this summer, Cisco, the telecommunication equipment provider, came up with a new hardware device. There are maybe 100,000 or even more engineers around the world who need to certify, who need to understand how this device works. The official course on this device from Cisco will cost maybe $5,000 and it is available about 6 months after the launch of the product, which is a standard approach. Now, the course on Udemy on this device was available 2 weeks before the device was even launched, because there's always some engineer in Cisco who knows that if he puts together a course, puts it online, he will make close to $1 million in just 6 months, because everybody will want to see it. Now imagine the same is happening in every other sphere of our life. There's always a domain expert who can realize that he can make a lot of money on just building a course and letting other people do it. And they have this millionaire club at Udemy, meaning trainers who make more than $1 million a year. And this club is growing like crazy. It started with just less than 100 people a year ago. Now there are thousands of people who make this amount of money. So this is bringing more and more people with knowledge onto the platform, and this is also attracting other viewers as well. At the same time, some other players on the market were saying, "Oh, but we will win on the corporate market." So Udemy is a public marketplace. It's not a corporate tool. So last year, Udemy changed the whole team. They hired new people. First, they hired managers who can bring the company to a multi-billion-dollar IPO, and they also hired people who are good in corporate sales. This year, the win rate of Udemy against all the competition and corporations was 100%. So whenever Udemy would come as a competitor into any corporation for the educational services, they would always win, just because nobody can compete with this model. When you have all this knowledge, it's like YouTube with all the knowledge. Now the biggest library for educational content is Udemy. So so we invested in them for the first time at the beginning of this year at the latest round, and because I had a lot of belief in what they were doing. Now we're participating in the current round as well, because I see even more potential in them. And my investment thesis is very simple. Their projected revenue for next year is going to be between $600 and $800 million. With even with the pre-bubble multiples, like a normal multiple for an education company would be something between 10 and 15 times their revenue, meaning that the company would be worth $6 to $10 billion. If the craziness on the markets continues like it's happening now, like if they would go public now, they would probably get a multiple of about 20, meaning that this is like a $12 billion valuation. And the current round's valuation, what we are is about 3.5 billion altogether. So we're talking at least 2x on the investment from now until the IPO, not even counting the growth of the company and not even counting the growing multiples on the market, which means that theoretically we can have maybe 3-4x if the market condition remains. The company is ready to go public now, and there were a lot of discussions if they want to do this now, but they decided because they're growing, like every quarter they're growing, 20-30%. It makes sense for them to add as much of new revenue into their books before they go public. So they decided they will either go public in a late spring, around May time, or in early autumn, maybe September, October, depending on how the market develops. But there is a strong intention in the company to go public next year. They're in talks with investment banks. Most likely Goldman Sachs is going to lead the IPO. They have all the team. They are extremely profitable. So their business model is very simple. You pay certain fee for the education service. Normally the course would be between $10 and $100 on average. So it's about maybe $20-30 per course average revenue per course. And then the author of the course will get 40%. They keep 60% of the profit. So imagine now the marketplace it's like Uber that is charging 60%, and everybody is happy because they have such a big audience. They have all these corporations. So for the producers of the courses, this is the easiest way to make money. So we're building a syndicate. We're actually closing it within the next 2 or 3 days. We've increased our allocation several times. We're now at we're going to close at about 25 million altogether in our syndicate, with probably around 200 members from around the world. So we're buying. We already bought shares from the primary round that just closed. We also bought out all of the preferred shares that we could find on the market, and we're now buying a big stake in of common shares from one of the ex-founders. So now all together, we're mixing all the shares together into the syndicate. When the IPO happens, it doesn't really make any difference what kind of share class, because there's no liquidation preferences on the preferred shares. So at the IPO, all the shares become the same. There's going to be another 6 months lockup period after the IPO. So we expect the total investment horizon to be around 18 to 24 months maximum, and we expect to make at least double the investment. Okay, I think that's the main story, and I'm happy to answer your questions. Arkady, you're muted.
Fantastic story. Can I kindly ask you to stop sharing this beautiful picture so we see you a little bigger? Wunderbar, wunderbar. So before we go into questions, I have a question just to a little bit reiterate. So the main difference between Udemy and Coursera.
Yeah, so the main difference is that Coursera is focusing on professional educational content. They are partnering with universities. You go on Coursera to get a full university degree. It means you need to spend at least a couple of weeks from a very short course to like 2 or 3 years for the full educational course, but the main benefit is that you get a full degree. So you can get like a Stanford degree, and it will have no difference from the offline university. It will be the same certificate, the same degree. So that's their biggest deal. Udemy is focusing only on consumer user-generated content. So all the courses there are produced by you and me and people like us.
Not yet, as I understand. Otherwise, we wouldn't be sitting here. So, but let me reframe it. Is it correct to say that Coursera is academic courses and Udemy professional courses?
Yeah, I mean, it's a big mix now. So on Udemy or on Coursera, you can still get some professional courses as well, of course, and they're moving into the space now. On Udemy, you can get courses on anything. I mean, you can get courses on how to draw an elephant or play a musical instrument. Anything that people think is interesting, like, because it's a self-developing system. People put content, other people vote for it. The more popular the content is, the more it goes to the top. So, for example, I have a statistics on the most popular courses this year, and they're really weird. It's like playing some random music instrument, how to teach your kids to draw, for example. So stuff that people were doing while they were sitting at home. But at the same time, still money-wise, the best courses there are programming courses, because most of the people, like, for example, in India now, this is #1 most popular application ever. So we're not talking like most popular educational service. It's like one of the most popular applications, most downloaded application, just because there's like more than 1 billion people there who need to learn how to program, and they hope to get this as their first profession. Coursera's revenue is coming from corporate deals. So they come, for example, they come to Sberbank and they say, you can pay $400,000 a year, and all of your employees can get access to all of the courses from all of our partner universities. This is their pitch. The pitch of Udemy is when they come to big company and they say you pay $400,000 a year and you get access, you get unlimited access for all of your employees, for all of the content and all of the training courses that we have on Udemy. And I think in the near future, every big corporation will have this as part of the benefit to all of their employees, and they will probably have both Coursera and Udemy.
Yeah, sounds very competing to me.
Coursera,
they're close. Very close.
Is it so? So you need to be prepared then. So for Coursera, this is their primary and almost the only source of revenue. For Udemy, this is just a new line of business. So until last year, Udemy wasn't really working with corporations. They were only consumer facing. So you come, the course costs $150, but you get an email saying that within the next 48 hours, you can buy this course for $20. You think, wow, great. You go and you buy 20 courses at once. That was their business model until like end of last year. This year, they started pushing corporations very efficiently to have these corporate deals. And the next year, they will, this is a big secret as well. Next year, they're launching a subscription service for consumers. So you will be able to go there, pay like $20 a month and get access to all of their knowledge online. This is going to be a big deal. because it's very it's getting very compelling. But for now, it's just you come and go, you pay as you go for the service, for the training courses.
Great. I have a question to Vitaly. Vitaly, can you switch on your microphone?
Sure.
Yeah, Vitaly runs a big software company in many countries. So Vitaly, are your programmers ever used Udemy?
Yep, of course. We have a bunch of clients who actually even transferred some of the courses to our guys to train. And from time to time, we also buying some courses from there. However, the only concern we actually have is more about the content they're providing, because sometimes the courses are not so good as they should be. So, I mean, again, my personal experience then in comparison to Coursera, the courses you are getting from Coursera are more, how to say, standard for one thing, but more effective in terms of the knowledge you are getting. But again, it depends, of course. But so main concern about the Udemy is more about that in order to find the gem, you need probably to dig inside a lot of more information and etc. Again, my personal opinion and the opinion of my guys, nothing.
Yeah, that's true. I completely agree, because Coursera course was prepared by professional educators, and they spend a lot of time, they pay a lot of money for developing this course.
Mm-hmm.
These are much better courses from the content perspective. So Udemy has much lower quality, of course, but they're beating just by the time. They're much faster to market because they don't have to wait. They don't have to pay for the content. Yeah.
Mass market.
But of course, if you take like the same course, if there is a course available on, if you take like the fundamental math course, for example, or basic physics, obviously Coursera is gonna beat the shit out of Udemy on this, because they have professional teachers doing this.
Okay. Now questions. Anton, are you still alive?
Yeah, sure, I am.
You had some questions which you posted in an email. Now it's a good time to ask.
All right. So the first one is, what is the short station? How would you describe the periods of time or necessity to get to IPO? I've heard information about that. Probably might be somewhere in spring or probably early autumn. Still, this process normally is organized quite strictly. I mean, if someone approaches to IPO, it should be organized at least in a year. So how would you forecast this? So just if it's possible to do more accurately, I mean, should we expect it definitely in 2021, or it might probably be a bit later? So this is my question.
Yeah, so of course, nobody can say for sure. I can only rely on the information that I'm getting from my partner, who's member of the board of Udemy, and he's saying that first of all, the company is ready. So they have like all of this preparation work. They already have done this work to go public this year, and the initial plan was to go public this year. Then COVID happened. It wasn't clear what was going on, and also the company started to experience this active growth, and decided that they probably need to postpone. And they're very conservative. They're not kind of guys who can merge with a SPAC and jump on the exchange next day. But as far as I know, they are in very. So the main signal that the IPO is coming is when they have a deal with the investment bank. So these days you don't have to publicly publish the prospectus like a year in advance. There's a special procedure that allows to do this privately for companies, and most of the companies prefer to do it this way. So we're probably not going to hear from them until the very last moment about the exact date. But I would say that the probability of them going public sometime next year is like more than 90%.
All right, thank you for that. And what is the actual investment proposal? I mean, you told that you have already 25 millions of commitments, and probably there is some kind of space for some of us. So what is the opportunity? Could you please describe it in numbers or just in conditions?
So the opportunity is we're accepting investments from, first of all, accredited investors. So you have to be accredited. This basically means that you probably know, like it's at least $250,000 annual income, or at least $1 million of free capital. For investors from outside the US, it's a self-certification process. So there's no need to provide any external documents. You just need to sign a paper during a subscription process saying that you accept yourself as an accredited investor. Then the minimum investment amount is $50,000. And I would say that now probably it's the maximum amount as well, just because we're finishing our allocation, maybe 100,000 maximum. And we've already distributed everything, but I have my own reserve of 1 million that I plan to invest myself, and I can I can cut a small piece to people who want to join and just to try how it works. So all of this money goes into the syndicate, which is a Delaware entity, SPV, special purpose vehicle. So it's a mini fund with the only purpose of investing into one company. So this SPV cannot do anything else with the money except for invest it into UDEMY shares. And for every dollar you invest in the syndicate, you get $1 of the UDEMY shares. And then we charge from 2 to 5% one-time setup fee, depending on the size of the check, and then we charge 20% carried interest from the profit. So let's say you invest $50,000, you pay another 5% of the setup fee. So that's 52,500. Then let's say you get $100,000 of the profit from it. So first we return the 52,500 to the investor. Then from the remaining, whatever, 47,000, we will take 20% for ourselves, and the rest goes to investor. And the beauty of Delaware is that it has zero capital gain tax for foreign investors, meaning that you pay no taxes in the US whatsoever on the investment, unless you are a US citizen or a green card holder, and which is very convenient. You only pay your local income tax, whatever that is in your home country. And in the meantime, so our job is to set up the syndicate, get the shares, manage the syndicate through the period, then sell the shares and distribute the funds. When the company goes public, it also opens an option for investors to get shares in kind. So for example, you say, and we have many investors who do it, you say, I don't want to sell because I believe in this business. I want to give the shares to my kids, for example, or keep them for the next 5 years because they continue growing at like 30% a year. So why would I sell? In this case, you inform us in advance that you don't want to sell the share. We will, once the company goes public, 6 months lockup period. After that time, we take the last 10 trading sessions as a median price from the last 10 trading sessions of the fair market value of the shares, and we take our carried interest in shares as well, and then we distribute shares to the investor to your brokerage account, and then you can do whatever you want with the shares. but that's only available after the company goes public, because until then, the private companies, they don't want individual small shareholders. That's the whole idea of the syndicate. We come together with a big check, and for the company, we're considered a U.S. investor, first of all, because we come through a U.S. syndicate, and we are considered a large investor because we come with a large check, and we get certain benefits in terms of access to the shares and everything. But we have to keep the shares in the syndicate as long as the company is private. But the good news is that there is no limit on selling your membership interest in the syndicate. So, for example, at any moment of time you want to exit, either you can find a buyer who will buy your portion of the interest in the syndicate, or we always have a queue of investors who are willing to join into already existing syndicates, and they're willing to pay the premium. Let's say in 6 months, the company will announce that they're going public. The investment banks will say that the company is going to be worth $10 billion. There will be a lot of investors willing to join because it's a very low risk investment, and you can just resell your membership interest to somebody else. We can find a buyer. So we cannot guarantee that we have a buyer, but so far we always have a queue of people who's willing to just take portions in existing syndicates.
So I understand that the good news in comparison to the early stage startups that we were investing in, looking in this year, there is a real opportunity for liquidity here. Yeah, if usually early stage investor is locked forever, or at least for the next 10 years, chances are pretty high that you could do a secondary deal selling your stake in UDEMY before the IPO, right?
Exactly, yes. And this is the beauty of this later stage deals, that there's always liquidity. It's not as big as with public markets, of course, but still better than early startups.
Let me add up a little more sugar into the offer from Pavel. So you know that changer never happy with standard conditions which are offered. Therefore, for some crazy reason, Pavel agreed that we could join this offer from starting from $25,000 per check. We also agreed a little lower commissions, so 4% for those who will invest under 100,000, and if Pavel will be so generous, those who were ready to put 100,000 more, it will be 2%. And carried interest will be a little lower. Instead of 20%, it will be 18. Yeah, I'm astonished that there is a marketplace who can charge 60% margin. I haven't heard about any other marketplace in the world that does it. So for me, it's crazy. I understand why they should go public next year.
Yeah, for me as well. I was surprised. Never see such 60% is unbelievable.
Yeah, it's unbelievable. And basically, it's a good signal to what Anton is concerned, that IPO is very close. Yeah, such kind of margins will not stay long. See, that's typical Latvia.
Yes.
We need the warm-up times, and the questions come.
Yes.
Geert, please.
So the question is the following: is Udemy profitable at the moment, or is it break even, or still in the red?
Yeah, they're super profitable.
Yeah.
So they don't need any money. The only reason they did a round now was that they were pushed by the largest investors who want to consolidate the position. So all the money that they've got in this round, about 100 million, they are basically using to buy out shares from the employees and basically to reconsolidate the ownership. So they're buying common shares from employees, converting them into preferred shares, and issuing to investors. So this round doesn't dilute the company. it's because it's for every share issued, they have one share bought out.
Yeah, so it means that now there have been like Series F, if I remember, in February or so. So basically every 6 months they had a new series of attracting, I don't remember, 20 or 50 million each series. So if they do not go to the stock market, let's say in March, April, May, so can we expect another series, or they're good with the money they're making?
Well, look, I can speak for them. So they like the round they did in February, they said this was the last fundraising for the company, but then they also came with this new round in November. But as I explained, they say they only did it to redistribute the shares. I don't know, maybe they do something like this again next year. Investors agree.
But they will not dilute the shares, right?
Yeah, that's the whole idea. So
yeah.
Nobody wants any further dilution, but large investors, they want to get even larger. And if you read the news, the February round was all taken by just one investor. So even the existing investors couldn't participate. Now, so they started to complain. They did this round so that existing investors can increase their position. And we're basically taking advantage of this situation now. I don't know, maybe they will decide to do something like this again in winter at a higher price or something, I don't know, but it's not going to dilute the shares, so it's not a concern for me.
Okay.
Are we done? Final.
Yeah.
Final remark, just to be on a safe side. So this American thing of being accredited investor, to summarize, for non-Americans, you don't need to prove anything. You should consider yourself accredited. It's enough.
Yeah. So I need to say this. So there is there's a KYC process. Know your customer. So we are obliged by the U.S. laws to verify who are the investors that we're dealing with, and this requires us to check basically 3 documents, like a copy of the passport or government issued ID, verification of the address or any kind of utility bill or something that shows your address and your name, and the source of funds. The source of funds normally is like if you have a social profile stating that you are owner of the business or executive, that's enough. If there is no information whatsoever about how you make your money, you need to provide some proof of where you got the money. It's not about the fact that you have the money, it's about the fact you did this honestly through business or inherited, but not not at some shady business. And as part of this process, we're asking for this verification. So basically, the source of funds can also be a recommendation from, like if Arkadiusz is saying, yes, I know this person, we've been working together, he's an honest guy, that's that can do the job for. You have to confirm that, yes, I understand. I know that what I'm doing is a risky investment. There is a risk of losing all the money. It's not guaranteed by anybody. That's basically the main reason for accredited investor status. So you basically know what you're doing. We're not allowed to talk to grandmas and solicit them into getting a loan from their apartment to invest into this kind of businesses. So you need to understand this is the riskiest type of investments you would ever make.